Let's talk about what's really happening with Finolex cables, what's their margin, their growth outlook, and whether or not they're actually beginning to see good demand already when it comes to EVs or not. Mahesh Viswanathan, the CFO at Finolex Cables, joins us on the show right now. Mahesh, hi, good morning. Great to have you on ET Now today. I'm just looking at firstly your performance and what's the outlook going forward, because the Q3 closed on a strong note for you with a strong performance across all your major segments and categories. Is Q4 looking better than what we've seen already in Q3?
Good morning. Thank you for having me. Yes, we had a wonderful quarter last. The December quarter was pretty good for us. Sales was up about 15% quarter on quarter, and profits also were commensurate in that line. All segments did well. The wires volume grew about 24%. On the communication side, optic fiber volumes grew almost 100%, and copper-based communication cables also grew substantially. On one side, it looks like the fears around COVID are behind us now. The market seems to be gearing up for the growth that has always been India's promise. So I think that's bringing us there. Automotive cables as a sector have been doing well this year, and like you mentioned, as we move forward, I think the growth in EV would also propel growth in this sector. The requirements are coming in fairly strongly, and we'll have to keep up with the designs and make sure that the deliveries are as required.
Tell us what is it?
Your other question was on what our expectation is for the fourth quarter. Typically, quarter four is always our largest quarter, barring any external shocks. I don't see why this year should be any different, and keeping our fingers crossed.
Is there a possibility that it could be better than Q3?
Like I said, historically, quarter four has always been the best quarter for us, and in that sense, I don't see why this year should be any different. And like I said, barring any shocks, keeping my fingers crossed.
I just wanted to also understand, there are concerns that the FMEG and Finolex J-Power JV, that is yet to emerge as successful. What is the update on this front? Because there is a bit of a concern on the street regarding the same.
Yes, we've not been as aggressive, or our growth has not been as aggressive as we would have liked it to be on the FMEG segment. But I think we are hitting the run rate of 200 crores a year now. And the next step, as I mentioned in an earlier call, was we are trying to reach 500 crores within the next 2 to 3 years. And at 200 crores, our margins would be, we would be at a break-even level. At 500 crores, EBIT numbers would be around 7 to 8%. Growing further would also mean that we are able to encash on any inorganic acquisition opportunity that comes up. We have the resources to handle that. What we have not found favorable so far are the valuations that we are coming across. So as and when we get a good buy, I'm sure we will be ready to cash in those. As regards J-Power, I think we are slowly getting to the end of the tunnel there. Our order book is building up. Currently, the company stands on an order book of about 350 crores. Their break-even would also be somewhere around 200 to 220 crores. And I think since the order book has been building up pretty nicely, I think the periods of losses are coming to an end fairly soon.
I want to understand whether you're anticipating any market share gains, especially when it comes to EVs that you just reiterated about.
Market share within the automobile sector?
Yes.
Sorry, I didn't hear you.
No, I wanted to understand, real estate sector is doing very well, which also means good demand for
Yes.
EVs. And, we've seen an uptick when it comes to urban consumption in specific. So wanted to understand whether or not you're seeing market share gains in the light of this, tough competition, which is also growing.
Well, we have always been a fairly large player, significant player on the wire side, and we continue to remain so. Uh, Gaining more would also mean that our reach is better than what it is today, which is why we have embarked on a different go-to-market model at this point in time, where we rely more on the distribution growth, uh, and therefore ensure that no geography is left uncovered. Uh, so we have over the last 2 years appointed close to 700 distributors, and we are able to take the reach to a retailer level to almost 190,000 at the moment. And that used to be around 40,000 2 years ago. So that's the expansion in reach that we have had. So that obviously will translate to larger volumes over a period of time. It's not going to happen over 1 quarter, but then it will happen over a period of time.
Great to have you on the show then. Thank you so much, Mahesh, for taking the time out and speaking with us today.
Thank you so much. Thanks for having me.